It does seem like people are all or nothing these days. They either believe big tech will continue to outperform, or they believe a crash is imminent. But what if this AI bubble just deflates rather than bursts? What if over the next few years valuations start to stabilize and returns move back towards their long-term average? There have been hundreds of videos made about the AI bubble and how to avoid it, and it's the same with mainstream media. The reason? It gets clicks. But what you do with that information is important. It may feel like the risky play is to stay invested, but what about the risk of being out of the market? I won't labour the point about cash versus equity returns and trying to time the market, but it is a risk that you have to consider. This is not me saying it's time to buy AI, but I do feel that the bubble label is sometimes a bit lazy. Some people are shifting allocation away from the US, but that's very different to selling and holding cash. Let's compare to some previous stock market crashes and see if we can find some similarities. This year we had the Trump tariff crash, and you could summarize that as government intervention with policy change. In 2022, that was the fallout from the lockdowns. Interest rates were increasing rapidly to counter inflation, and you also had the outbreak of the Russia-Ukraine war. 2020 was the pandemic itself, a sudden economic slowdown due to lockdowns and oil price shocks. 2008 was the global financial crisis, which saw subprime mortgage defaults rise, while banks were highly leveraged selling these risky products. A proper systemic breakdown. 2000 was the dot-com crash, which saw extreme valuations and speculation around the boom of the internet. Many companies weren't even making any money. Capital dried up and many firms failed. And 1987, known as Black Monday, this had a fragile market backdrop caused by rising rates and inflation. Institutions will also increasingly use computerized trading. Portfolio insurance was introduced, which was created to limit downside by reducing equity exposure, but this actually accelerated a small drop by selling into a falling market. The key with these crashes is that they were caused by something that broke or a sudden shock. The market backdrop can determine the pace and the shape, but it's not usually the cause. If a global shock were to happen in today's market, it's likely that big tech would be hit hard. We saw that earlier this year. But being such big companies, they also have the ability to recover fast. As a long-term investor, you have to ask yourself, how active do you want to be? I certainly don't know what's going to happen, but I do think not enough attention is given to the risks of these active plays, and of course the risk of not investing in the first place. We have a massive investing problem in the UK. It's not included in education, and people understandably are nervous about losing their money. There are of course risks involved in investing in the stock market, but a guaranteed way to lose money is by holding cash through the erosion of purchasing power. I always find it interesting looking back at old news headlines to see how accurate they were. At the end of 2022, the media was awash with recession fears, and outlooks were pretty dismal. But the S&P 500 went on to do around 26% in 2023. At the end of 2023, there were still recession fears, as well as worries about falling growth across the world, but the S&P 500 went on to do over 24% in 2024. At the end of 2024, it was more around correction talk, which to be fair did happen due to the tariffs, but the market recovered so quickly to now sit around 17% year to date. Corrections come in so many different forms. Some are sharp, some are more gradual. How you react and play it will depend on your individual situation, but it's important you weigh up the risks of both sides. If you want to discuss this further, we can do so in my Discord community, which you can join using the top link down below. One play people are making is moving towards dividend stocks. If you want to find out what the best UK dividend ETFs are, then check out this video here. Thanks for watching. I'll catch you in the next one.